Hello everyone, welcome to my channel. Through this video, let us learn the deductions under section 35, that is for expenditure in connection with the scientific research. The point 1 says revenue expenditure incurred by the assessee himself for scientific research. As per section 35, subsection 1, clause 1 says, where the assessee carries on scientific research in relation to his own business, any revenue expenditure made by the assessee on scientific research during the previous year shall be allowed in full. Further, any such expenditure incurred during the 3 years immediately preceding the commencement of the business on payment of salary to an employee engaged in such scientific research or on the purchase of materials used in such scientific research, the aggregate of the expenditure so incurred shall be deemed to have been incurred in the previous year in which the business commenced, as shall be deductible in that previous year. So here the revenue expenditure incurred by the assessee in connection with the scientific research during the previous year shall be deductible in 100%. But at the same time, even that revenue expenditure incurred in connection with the payment of salary to an employee or for the purchase of materials used for scientific research, even these expenses happen 3 years prior to the commencement of the real business. Even that expenses would be considered as the expenditure incurred during the previous year and it can be deducted in the previous year in which the business is commenced. The second situation is the contribution made to outsiders. It is not on research, but the contribution made to outsiders. Some paid for scientific research to an approved research association or a university or a college or other institution. It is allowed as deduction at the rate of 150% with effect from the assessment year 2018-19 of the amount so paid, whether it is related or unrelated to the business of the assessee. So here, a contribution made to scientific research but not carried out by the assessee by himself, but it is carried out by any research association or a university or a college or other institution which is approved under section 35 section 1 and clause 2, then it shall be exempted or deductible to the extent of 150%. But with effect from assessment year 2021 to 22, the deduction shall be restricted with 100% instead of 150%. The point 2a says sums paid for scientific research to a company 100% with effect from the assessment year 2018-19 on the sum paid to a company shall be allowed as deduction if such company is a registered company in India. Its main objective is to carry out scientific research. It is approved by the prescribed authority and it fulfills such other conditions as may be prescribed. But the condition says no deduction shall be allowed to such company in respect of expenditure referred under section 35 2ab. The third point says sums paid for social or statistical research as per section 35 subsection 1 clause 3 with effect from assessment year 2018-19, it is 100% of the sum paid to an approved research association or to a university or to a college or any other institution to be used for research in social science and statistical research is allowed as deduction, whether it is related or unrelated to business of the assessee. And there are certain conditions The deduction under section 35 subsection 1 clause 2 and 3 will be allowed on the fulfillment of the following conditions. Condition 1 says, it is approved in accordance with the guidelines in the manner and subject to such conditions as may be prescribed. Secondly, it is notified by the central government. The research association, university or college or institutions shall make an application in the form and manner to the central government for the purpose of grant of approval or continuance thereof under these clauses. The third point says central government may, before granting approval, call for such documents, including audited annual accounts or information from the research association, etc., in order to satisfy itself about the genuineness of the activities of research association, etc. When an application is received by the central government for the approval, every notification under section 35(1), 35(2) and 35(3) shall be issued, or an order rejecting the application shall be passed within 12 months from the end of the month in which the application was received by the central government. Here the things to be noted are the deduction to which the assessee is entitled in respect of any sum paid under section 35(1) and 2 and 3 or under section 35(2)AA shall not be denied merely the ground that subsequent to the payment of such sum by the assessee, approval granted to the recipient of the sum has been withdrawn. Now, capital expenditure on scientific research incurred by the assessee himself. Section 35(1)(4). The salient features regarding such expenditure are: 1. Any expenditure of a capital nature on scientific research related to the business carried on by the assessee is allowed in full for the relevant assessment year. Secondly, no deduction shall be admissible in respect of any expenditure on the acquisition of any land. If any capital expenditure has been incurred during the 3 years immediately preceding the commencement of the business, the aggregate of the expenditure so incurred shall be deemed to have been incurred in the previous year in which the business is commenced. The fourth point says, capital expenditure on scientific research which cannot be absorbed on account of insufficiency of profit under the business head or any other head, the unabsorbed part will be carried forwarded and treated in the same manner as unabsorbed depreciation. The next point deals with the capital asset used for scientific research can be used in the business for some other purposes. If it ceases to be of any use for scientific research purpose, in such a case, no depreciation shall be allowed in respect of such asset as it has already been written off under section 35. If any asset used for scientific research is sold, then the price realized for the same shall be taxable in full. If any deduction is allowed in respect of any capital asset on scientific research, no deduction for depreciation will be allowed in respect of that particular asset. The thing is, either the deduction under section 35 or deduction under section 32, any one only could be allowed in that sense. If it is already depreciated asset or deduction received in any other context, it will not attract for deduction in scientific research as per section 35.
Under a scheme of amalgamation,
the amalgamating company sells or transfers to the amalgamated company any asset used for scientific research. The amalgamated company would be entitled to all those deductions in respect of the asset which would have been available to the amalgamating company as if no transfer has been taken place. The next point deals with sums paid to a national laboratory or a recognized university or an Indian Institute of Technology for approved scientific research program by the assessee as per section 35 2AA, provided any contribution made by the assessee in this regard, which is approved by the prescribed authority, and the assessee will be eligible for a weighted deduction of 150% with effect from assessment year 2018-19 of the sum so paid. Further, such sum shall not be entitled to any other deduction under this act. With effect from the assessment year 2021-22, the deduction shall be restricted with 100% instead of 150%. And the national laboratory means a scientific laboratory functioning at the national level under the Indian Council of Agricultural Research or the Indian Council of Medical Research or the Council of Scientific and Industrial Research, and which is approved by the prescribed authority is termed as national laboratory. The sixth point is expenditure of in-house research. As per section 35 2AB, a weighted deduction of an amount equal to 150% of the expenditure incurred by a company on in-house research and development facility shall be allowed if the following conditions are satisfied. Point 1 says the expenditure should be incurred in the business of biotechnology or the business of manufacture or production of any article or thing, not being an article or thing specified in the list of the 11th schedule. The research and development facility is approved by the prescribed authority. The company has entered into an agreement with the prescribed authority of cooperation in such research and development facility and for audit of the accounts maintained. The next point says the prescribed authority is satisfied about the genuineness and capabilities of the company to fulfill its obligation relating to scientific research. Next point deals with the prescribed authority shall submit its report to the principal chief commissioner or chief commissioner or principal director general or director general. So here we have to add one note. With effect from the assessment year 2021-22, the deduction shall be allowed 100% instead of 150%. Similarly, both capital and revenue expenditure are eligible for weighted deduction under section 35 2AB. I hope the concept of section 35, that is expenditure in connection with scientific research, may be carried out by the assessee by himself or may be carried out by the some other university or college or research centers, then these condition has to be satisfied. I hope this video is going to be useful for you. If it is, kindly share it, like it and subscribe my channel. Thank you very much.